Namaskar. We at Him Life School believe the concept of learning without books. Now, at the end of the day, we are trying to summarize what they have learned and we are trying to pick up a few concepts which are important and fundamental to the entire process of auditing. So, we have Mani, Sadak, Tushar, and Bhuvan who are writing their exam in September 24. Now, today they have completed 3 chapters, out of which we want a quick discussion on management assertions because a lot of students find it a bit complicated. I want each of them to pick a assertion and talk about it in 60 to 90 seconds. Yes, who want to go first? Yeah, go ahead.
So, the first thing relating to cutoff.
Cutoff, okay.
So, all the income or expenses in the income statement and all the assets and liabilities in the balance sheet statement, whether they are reported in the current accounting period or not. It simply says that are they reported in the current accounting period or not. So, coming to example of cutoff. So, when it comes to income statement, so employee benefit expenses are there. So, they have been recognized during the year. So, we need to see that they have been recognized. All the employee benefit expenses recognized should be of the current period, current accounting period only. And when it comes to balance sheet items, inventory balance, inventory balance at the end of the year, it should be relating to the current year only, and it should not contain any element which relates to the next financial year.
Fair enough. Short and sweet. Good. Sadak.
When it comes to assertions are representations made by management, whether explicit or otherwise. Like management are embodying some representations made by them in the financial statements regarding completeness, cutoff, occurrence and existence, valuation, presentation and disclosure, and rights and obligations. These are the assertions they made. But the thing is that today what I am going to tell is completeness. Completeness is in case of incomes and expenses. When we are going to apply procedures, audit procedures regarding completeness, we need to understand that all the transactions have been accounted fully or not. That's the thing. And what are the transactions that are supposed to be recorded are recognized or not. That's the main point you should see. For example, in case of employee benefit expenses, all the employee personal related expenses are accounted for or not. And in case of sales, all the relevant sales and genuine sales are recorded or not. That should be checked. In case of assets and liabilities, the completeness can be checked by applying the audit procedures of in the assets and liabilities. We can check that all the transactions that should be recognized are recognized or not. And next, in case of inventories, we can apply the audit procedures such as all the inventories held during the year are being accounted or not. We must check that what are the inclusions and what are the exclusions. The things which are included as the inventory which are owned by us but kept at the third party's place, that must be included, and the inventory which are not ours but kept at our place must be excluded. This is the point.
Good. So I like the way you started because you added and defined management sessions and also described all the sessions available. Good. So, Tushar.
So, as Sarthak said, that assertions are things which are implied by management when they are making their financials. So, if we see, like we all know that financials contain many elements, so there can be 2 separate elements. There are 2 separate elements, balance sheet and P&L. So, if we see existence, then that is a common assertion, but for balance sheet it is said as existence, for P&L it is said as occurrence, because in P&L we don't usually just see the year-end account balances, but the P&L represents the whole, all the transactions which have occurred in a year. So for P&L we say existence and occurrence. So in this assertion, the management, what it is trying to imply is that the transactions which have been recorded or shown as an account balance have actually occurred in the relevant financial year or not.
Yes.
So if we see in balance sheet existence, then we'll check whether the account balances which have been shown, they, for example, PPE. So property, plant and equipment which has been shown in the balance sheet actually exists with the entity. For that we can do physical verification,
Right.
so that will help the existence. But at the same time, if we see the purchases, then that is a P&L item, and for the purchases, to see that the relevant purchases have occurred in the financial year or not, so that for that we can maybe obtain a listing from the entity, and we can see that all the purchases which have been done are by an approved supplier only. So if it is not from an approved supplier, we can say that this is not as per your
Right.
listing, so it cannot be occurred in this year.
Right.
So that is a basic thing that we need to check whether all the entries which have been done is relevant and have actually occurred in the present financial year and have been shown by the
Very good, Tushar. Especially the way you differentiated between assertions for balance sheet and P&L. A lot of students miss that. Very good. You explained it very well. Bhuvan?
Yeah, assertions are nothing but management representation. One important assertion is presentation and disclosure, where the auditor has to get sufficient appropriate audit evidence regarding the present amount, classification, presentation and disclosure, both P&L and balance sheet items. So for disclosures part, the auditor need to be careful about whether few disclosures which are susceptible to misstatement. There the auditor has to be little careful and should be having significant judgment on it. So these are the management assertions.
So far, so good. Basically, this is the ability which you have to build. Again, the questions won't be as direct as how we are discussing, but the most important part is at some point of time, you have to cut off your preparation. As Mani started about cut off, now you're cutting off the preparation, and it has to move to presentation. Now, presentation right now making it simple because thinking. When you look at the answer sheet, people talk about presentation, but presentation is a consequence of processing. How we process internally. So I'm happy with the outcome for a day 0. So tomorrow we'll discuss the macro chapters, especially chapter 3, chapter 4, chapter 6. Because 4 and 6, evidence and documentation are linked, and chapter 3 is the heart of our discussion and internal control. If we do this, by tomorrow, within 2 days, we will have covered 60-70 marks. And there will be some gaps which have to be filled, but you get an overall understanding, and then we'll write an exam and we'll spend 2-3 hours only on MCQs. So you get super good comfort in audit by day 3. Okay, this is what we're going to do. Thank you, Vishal, for recording this. More of this tomorrow.